Hey everyone, welcome back to Corporate Decoder, the place where we dissect those lengthy corporate filings so you don't have to. Today we are diving into Safety Insurance Group's annual report, and let me tell you, it's a bit of a paradox. It's like an insurance company that is promising safety but is constantly talking about all the ways you could lose money. We will try to unpack that and find out what is really going on. Safety Insurance Group, if you are not familiar, is a pretty big player in Massachusetts, New Hampshire, and Maine, mainly dealing with car and home insurance. They work exclusively with independent agents who account for most of the insurance market in Massachusetts, more so than in other states. Let's get into what they actually do well and how they plan to stay on top. According to the report, they have strong relationships with independent agents, a history of being profitable, and they continue to develop and deploy advanced technology for their business. They're trying to increase shareholder value by sticking with independent agents and giving them the resources they need to keep customers happy. Looking at where their money comes from, Massachusetts is the big breadwinner, bringing in over $1 billion in direct written premiums. New Hampshire is a distant second, and Maine is even further behind. Private passenger automobile insurance is their main product, taking up a big chunk of their premiums. Homeowners insurance is also significant and growing, so they're not just a one-trick pony. They are also putting more money into marketing, specifically targeting independent agents. It is all about maintaining strong agent relationships by providing them with a full package of insurance products and information technology services. Their strategy is to penetrate the Massachusetts, New Hampshire, and Maine markets, implement different rates and billing options, and expand their technology. They also have a product management department that reviews their products and rates compared to the competition. As we all know, cybersecurity is increasingly important and on everyone's mind. Safety's Cybersecurity Committee monitors for emerging threats, evaluates preventative tools and employee training to improve enterprise security. Now let's talk about reserves. Insurance companies need to hold money in reserve to pay out future claims, especially unpaid losses, and this process is inherently uncertain. The company's net loss and LAE reserves, based on actuaries' best estimate, were set at $540.9 million as of December 31, 2024. To protect against catastrophic events, Safety uses reinsurance. It is basically insurance for insurance companies. The insurance business is highly competitive, and Safety faces big competitors with greater financial resources. Their primary competitors are large national writers of commercial auto, such as Progressive and MAPFRE. Let's zoom in on the employees. At the end of 2024, Safety had 551 employees, all working in New England. It seems like Safety prioritizes a good employee experience, offering competitive benefits and flexible work arrangements. They also give back to the community through charitable donations and volunteer activities. Now to the financials, which are also super important. As of the end of last year, their investment portfolio was mainly made up of investment-grade bonds, U.S. government and agency securities, and asset-backed securities. They try to maximize returns while investing cautiously. Net investment income came in at $55.7 million. However, this is slightly down compared to the previous year due to changes in yields. Moving on to risk factors. Being in a heavily regulated industry means they are subject to many rules and laws. Their private passenger automobile business is concentrated in New England, making them vulnerable to conditions in that region. The insurance subsidiaries are exposed to potential losses from severe weather, so unexpected storms can hit their bottom line hard. There's also the risk that losses and loss adjustment expenses may exceed their reserves, which could significantly affect their business. Finally, they are dedicated to controls and procedures. The CEO and CFO are concluding that their disclosure controls and procedures are adequate and effective, but there can be no guarantees in the business world. So what's the verdict? Safety Insurance Group seems to be in a solid position. They're growing their premiums, focusing on technology, and managing their risks as best they can. However, their biggest threat could be managing potential unexpected losses, with their liabilities being very prone to changes in economic, environmental, and political factors. As with all insurance companies, safety is not a certainty, past performance is not indicative of future results, and nothing is guaranteed. Thanks for watching, be sure to hit that like button, subscribe for more, and tell me what you think.